Fed Governor Christopher Waller suggesting that the Federal Reserve could cut fewer times this year and start later as a result of stronger than expected growth. Also, inflation data so far this year. Let's find out what all this means for the markets. Jim Paulson is former chief investment strategist for both the Leuthold Group and Wells Capital Management, currently the author of the newsletter Paulsen Perspectives. So I'm trying to figure things out, Jim. You did not retire. Did you retire and get pulled back in, or is it the newsletter, or we haven't seen you in a while? Did Leuthold tell you? Did you sign some kind of non-compete or something? Why haven't you been on the show for, how long's it been? A couple of years?
Well, it's been over a year. Yeah, I tell you, Joe, I'm still retired. But I just this is just one of my hobbies. I just never really totally could get away from the markets and the economy.
I don't see how you could. And I'm glad you didn't.
So yeah. I'm right.
Let me, the last time I'm trying to, my memory is actually still pretty good. But the last time you were on, you were much more bullish than the street. I remember that. And that's why I was disappointed when you weren't going to be on anymore. But I don't remember whether you were bullish for the right reasons. And in the past, there have been other instances where you were right, but for the wrong reasons, and other times when you were wrong but had all the right reasons. Do you remember what do you remember all those times? Commodities, all that stuff. Yeah, and you were never, you may have known nothing, but you were never in doubt. That's what we love. But a year and a half ago when you were on, you were bullish on the markets. Why?
Well, the primary reason, Joe, was disinflation. Disinflation historically has been such a powerfully good force for stock market. I mean, it does a lot of great things. It takes the pressure off, cost pressures off companies. It raises the real purchasing power of households. It raises consumer business confidence. It tends to cause stocks and bonds both to go up as a wealth effect. That was the primary reason. I expected rate cuts this last year. I did. I think the Fed's been super tardy, both on the way up with inflation and on the way down. In fact, when I look back historically, Joe, at the Fed's performance, it's an absolute outlier in post-war history. They raised or didn't raise rates the entire surge of inflation from 0 to 8.5%, and then they cut or they raised rates the entire time that inflation decelerated from 9 back to 3%. And no one's ever done that before. Usually, the Fed is raising rates when inflation's accelerating and cutting rates when it's decelerating, and they've done neither of those. They were late to tighten, and now they've been late to ease.
So when you were talking that you thought disinflation was going to boost the market, that was after we had already seen the 40-year highs in inflation. So you thought it was going to come down more quickly than the Fed thought, and that basically has happened until recently, where it looks like it's sticky. You don't think right now it is a problem, and you think Waller's wrong to say don't cut right away?
Well, one thing that I find fascinating today, Joe, is let's just look for a minute where we're at. We got this, all this apprehension because we're not at 2% inflation. It's like terrorism that we can't get there, and how bad it'll be if we don't. But here's the reality. We're sitting in the last a little over a year, about a year. And, the CPI inflation rate's been 3%. It's been very steady and stable, hovering around that level. Wage inflation for the last 6 months has been very stable, around 4%. The real wage rate has been rising steadily, now at a 1% clip. Real GDP growth is 3.1% in the last year. Employment growth just shy of 2%. Productivity is at 2.6. The unemployment rate has been less than 4% for almost 2 years, and the stock market's up 30% in the last year. In earlier times, when we didn't have this 2% fixation, we would call this environment nirvana. That would be nirvana. In fact, it has echoes of what Greenspan had in the 1990s during his era. That was kind of the data he had, and that's how he got the moniker Maestro. And today, we have so much criticism of everything that's going on and worry about how it's going to turn out. And yet, I think you ought to step back and look at this. This is a pretty good environment, and I think it's going to likely stay that way for a while. We're only a little over 1 year into this bull market, and much of the market hasn't even really joined the party yet. There's all this sitting in money market funds that could come back in. There's a lot of good things that could still happen.
It's interesting because, yeah, it's like 2%, 2%. Oh, suddenly that became like if you don't get to 2%, I mean, I don't know what might happen. I mean, the sun might not come up if we don't get to. But there is a feeling that if you don't get it to that point, you haven't really wrung it out of the system, and it can come back and go to much higher than like 3. I don't see 3 doesn't sound that bad. It really doesn't. And historically, it's not that bad. But they think that would portend 4, 5, 6 back to those horrible numbers that we're all still dealing with because it's still in a lot of these prices. But we got to go, Jim. But it's been too long.
Look back to 1980. We have not had a serious inflation outside of the pandemic-induced inflation.
Right.
Even though unemployment's got low, even though we've been growing strong, we have been unable to produce a serious inflation. And that's because we have such strong secular disinflationary forces that still exist today.
Still here.
Without a pandemic, we couldn't have done that.
And it's, with AI and importing disinflation, it should still be coming maybe from other places, Jim. So you might end up being right. But so you're going to, when are you retiring again? We can count on it. If we can't call you in a month, tell us now. Are you back? Or are you sort of back?
I'm back writing regularly and enjoying that and having fun with it as a hobby, but I'm not back working for anybody, but I'm going to have fun and I investigate.
You don't need to work for anybody. You don't need to. You've already got a rep and you can come on here if you call us. So
we've missed you, Jim.
Yeah.